Yo, what's up, guys? This is a rerun of yesterday's Zoom video. A lot of people missed it because it was a Saturday, and people that were there asked me if I can maybe redo this video, and people that haven't missed it asked me if I could just do this video for the YouTube again because they would like to watch it. Firstly, I want to say thank you for everyone that had came through on the Saturday, even though it's a Saturday, you just want to chill. So, first, I'm gonna introduce myself like I did. Most of you know me from Pezulu FC, where I'm a co-founder of Pezulu. We're a trading community. Most of you know me from my YouTube videos where I talk about prop firm trading. I'm a prop firm trader, and I recently passed 100k accounts, as you can see. Size 100k, provider FTMO account type. Yeah, this was a recent achievement. And I also have a Signal group that most of you also know me by. So first we're going to jump into the explanation of correlation and how it works, and you know think of it as trading data. I know some of you like to trade as soon as fundamentals come out. After fundamentals come out, you tend to trade in that direction. You can look at it as the same thing because correlation is trading data, right? So what you would do is, okay, now these are your correlation numbers. Let me just show you guys so you get a quick good look. So I'm going to explain to you how we get these numbers and what the numbers represent. So I want you to think of it as +1. It means it's strong, 0, neutral, -1, weak. So now I'm going to give you a quick example on the charts. Right, so the way we get our correlation numbers, we compare the currency to each currency symbol. So it'll be Euro Pound, Euro USD, Euro odd, Euro NZD, Euro CAD, whatever. And for each of those numbers, we would get these, these answers here. Like you see Euro Pound -1, here it's +1, GDP USD is neutral, GDP odd -1, odd GDP odd here +1. So by doing this, we get the trading data. So now let me show you what this helps with, right? And also basically how you can use this. It's just in your head, you can see that, okay, after I've done all my data, you can see, okay, the chef, its momentum is bearish, right? And you can look at it as euro, your momentum is bullish. So ideally, I should have maybe looked at taking, a Euro Chef trade, but I went EU because I particularly like the setup. So anyways, getting back to it. So mostly everyone trades with price action, right? And sometimes, it'll come to a dilemma of, okay, is my price action working? It worked today, it didn't work the previous day, it works sometimes. And now I'm not telling you correlation is gonna save you, but it's gonna kind of give your price action more meaning and like more, more facts in a sense. Because if you're seeing a buy setup here where we took it, and this was our correlation from the 19th of April, and you see a buy setup and you say, okay, the correlation matches it, okay, let's go for it, and then you take your buy and the odds are in your favor for it to work out. But as you can see here, we're taking this on the chart lab, the chart headquarters. As you can see here, we had our correlation pointing downwards. So as the price coming here, we aware that we're not going to buy this because our correlation is telling us that the momentum is going downwards now, and now we should look at again the sells. We took a 1 to 3.3 RNR here. It was just a quick trade, but as you can see, the correlation kind of gives you an idea of should I be trusting my analysis. It kind of gives you like some factual piece of evidence to pair with your analysis, because analysis can be really opinion based, right? I can be saying, okay, now I see a buy there, I see a sell there, but now once I add the correlation to how I see particular structures, it kind of makes each thing on the charts that I'm seeing more factual. Okay, so I hope you guys understand like what I've just explained there. So now I'm going to show you guys how you can get the numbers. So I did it for the 19th of April to here because this is the example I wanted to use. So I'm going to show you guys two structures. Correlation goes in depth. There's so much more about correlation that a lot of people don't understand, and there's different types of correlation. This is just trading correlation. There's market correlations. There's it's just a lot. But I mean, once you do learn it all, it's really beneficial. But anyways, getting back to this. So you would look at you see how I have these lines here. So you look at this is your market open. Okay, you'd say, okay, it started here, it had finished here. So now how you would take this piece of information, you would plot it on this here. You'd say, okay, Euro USD finished higher than what it started, and now it finishing higher than what it started kind of gives you an idea of, okay, the momentum is going higher, so my correlation has changed. So now if you think about it, like, I know you guys, some of you trade supply and demand, and supply and demand traders like are really good when it comes to correlation because they understand the concept so well because it's the way they trade. So, right, if this correlation is pushing down, it's been pushing down, it's been pushing down, and now we have a sudden change in the correlation, right? So the price, think about it like this, if you really just focus here, you'll take away so much and you can just improve your trading. So the price is here, right? But the price was here when correlation was going down. So now you need to ask yourself, if the correlation is the opposite way around now, the correlation is completely changed, right? It's completely changed. It's Euro +1, USD -1, right? So then you'd ask yourself, why is the price so low? We need to find an equilibrium. So you would take your information and say, okay, no, this is underpriced because the euro has better correlation than the dollar now, and it shouldn't be sitting around this area because the correlation has changed, and you would try to find a chart equilibrium for it. And the same idea comes in here, and this is what I call this a correlation correction. Most people in my signal group understand these type of setups well, and we flourish from them. So this is what we call a correlation correction. So if you can see, it's been trading higher, and then it makes a market, like the market opens here, right? And the market ends here. So now again, the correlation has swapped around, but the price is still relatively high. So now the correlation has swapped around completely, and the price is still here. So now we say, okay, this current price in terms of correlation is overpriced. It needs an equilibrium. Hence, we took the sell here. But if you see it like this and you say, okay, now I have a buy setup on this and I see a correlation correction, it's not going to work because the correlation is telling me that now the bearish momentum is settling in faster. So now if you say, okay, now I see a potential, level that I can sell here, you try get into it, and it would have worked out and you would have taken it to a basic chart equilibrium. So now support and supply and demand traders will understand the concept of correlation easier in sense of, okay, I have my supply, I have my demand, and now I need to find the equilibrium. It's much easier for supply and demand traders to figure it out. But yeah, that's all I'm gonna share today in this video. Correlation helps with a number of things. For me to explain it all would take a lot more time. But I hope that this video helps the ones that have asked for it, and I hope that you implement it in your trading and it helps you. But yeah, if you guys wanna message me or communicate with me, you can find me on IG. You can find me on Telegram too, and we also do a lot of the structures on my chart headquarters, and you can also look into that. I also do a lot of mentoring of correlation because it goes into so much depth. So you can always message me for those things. But yeah, enjoy your day, guys. Cheers.